A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a significant turn of events, emerging market currencies and stocks have taken a hit following President Donald Trump's recent announcement of potential blanket tariffs ranging from 15% to 20% on a majority of America's trading partners. The MSCI index, which tracks developing world currencies, has dipped, with the South African rand and the Mexican peso leading the downward trend. The Bloomberg Asia Dollar Index has also fallen by 0.4% this week, marking its most substantial weekly loss in 6 weeks. Furthermore, an index measuring emerging market equities has shown signs of weakness as well. In his latest remarks, Trump has escalated tensions by threatening a 35% tariff on specific Canadian goods, further adding to the unease among investors. Despite these developments, some investors are holding on to optimism, believing that the long-term trends supporting developing economies will persist despite the recent downturn. Anders Ferdman, a portfolio manager at PineBridge Investments, noted, "Emerging market investors are accustomed to uncertainty and navigating through headline noise. So unless the trade negotiations between the US and EU collapse, we remain confident in the macroeconomic situation." This week has seen markets on edge as the new tariff announcements seem to reverse earlier relief when Trump postponed the effective date for most US levies to August 1st from July 9th. Investors are keenly awaiting US inflation data set to be released on Tuesday, which could provide insights on the potential impacts of tariffs as well as the Federal Reserve's policy direction. Ferdman added, "Growing confidence that the Fed can achieve a soft landing and resume its easing stance in September, combined with strong technical indicators, has given a boost to EM high yield." In a separate development, Oman has seen its dollar bonds outperform after receiving its second investment-grade upgrade in less than a year. Meanwhile, Ukraine securities have also emerged as top gainers as an international conference discussing the nation's recovery plans comes to a close in Rome. In another twist, President Trump has recently threatened to impose a staggering 50% tariff on all Brazilian exports, effective August 1st, 2025. This controversial announcement, made via a letter on social media, ties the proposed tariffs to ongoing domestic issues in Brazil, including judicial proceedings against former President Jair Bolsonaro and rulings by the Brazilian Supreme Court against US-based social media companies. Trump's actions have drawn sharp criticism from Brazilian President Luiz Inácio Lula da Silva, who firmly stated, "Brazil is a sovereign nation with independent institutions and will not accept any form of tutelage." Under Brazilian law, digital platforms must monitor and remove content that incites violence or undermines democracy, making them liable for failures in this regard. While a 50% tariff on Brazilian exports could seem economically catastrophic, it might also serve as a strategic turning point for Brazil. Despite being one of Brazil's largest trading partners, the US has maintained a trade surplus with Brazil for the last 5 years. If these tariffs are enacted, Brazil has several retaliatory options available under its economic reciprocity law, including raising import tariffs on US goods and suspending bilateral trade agreement clauses. The impact on US consumers could be immediate, with prices for breakfast staples such as coffee, eggs, and orange juice likely to rise. Brazil is not short on allies or alternatives, as the country has been strengthening ties with fellow BRICS nations and exploring newer partnerships. This dispute could accelerate Brazil's efforts to diversify its export markets and enhance South-South cooperation, which is not only ideologically appealing but also economically sensible. Moreover, this tension presents an opportunity for Brazil to reinvigorate South American integration, potentially breathing new life into stalled initiatives within the Mercosur bloc. Ironically, Trump's aggressive stance may undermine his ideological allies in Brazil. While supporters of Bolsonaro have praised Trump's intervention, they may be overlooking the broader political ramifications. Historically, Trump's influence abroad has often led to backlash against right-wing candidates in other countries. As the situation unfolds, all eyes will be on how these developments impact global markets and the future of international trade relations. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.